morning. You're watching Market Cafe on ET now with me, Shreyanshi Singh. And over the next few minutes, I'll get you an update going on whatever is happening across the world, as well as in the country as well, and also tell you what the Wall Street is doing, stocks that you should be keeping on your radar bright and early this morning. So let's kickstart the show then. Start taking a look at the handover coming in from the Wall Street, and it's a very rocky session that we had, with the major averages in fact going back into sell-off mode at the latest in sessions on US President Donald Trump's tariff policies that failed to calm investors. When you take a look at the blue chip Dow, you're looking at a loss of more than 400 points for the Dow. The Nasdaq composite as well fell into a correction territory, ending the session more than 10% off its high. So that was the Nasdaq composite for you. When you take a look at the stocks, they've been on a roller coaster ride as Trump's tariff policies have worried investors over future US growth. So that's something that you're looking at in terms of a broader picture there. This latest market rout also put the three major averages on course for their worst week since September 2024. So you're taking a look at the S&P 500, that is off a 3.6% on a week-to-date basis. The 30 stock Dow is also the one that's down 2.9% on a weekly basis. And the Nasdaq is the underperformer, even amid this sort of weakness that you're seeing coming in, down 4.1% so far this week. In terms of the top catalyst, going forward, you have February's non-farm payrolls report. So definitely something that we're going to be keeping an eye on. But speaking of what to keep an eye on, let's also take a very quick look at what oil was doing, because oil settled largely unchanged in choppy trade. And choppy trade is the keyword there, because you do have global benchmark Brent that closed below that $70 a barrel mark. Nonetheless, under pressure from tariffs between the US, Canada and China, and also plans by the OPEC Plus to raise output that have also been in the spotlight. So when you take a look at Brent futures, you're looking at just a little bit of an uptick, 0.2% uptick coming in for Brent futures. $69 a barrel is the level that you're looking at for Brent, and US WTI as well. Just a 5-cent uptick coming in for US WTI. $66 a barrel is the level that you had for US WTI. Now on Wednesday, of course, you did have a lot of weakness come in as far as Brent prices were concerned. $68 per barrel is the kind of price that you saw for Brent. It's weakest since December 2021 after that larger than expected build in US crude inventories further pressured oil. In terms of other factors, you have that OPEC Plus hike that kicks in from the month of April. In terms of the output quotas, for the first time since 2022, this is a hike coming in from the OPEC Plus, new US tariffs as well. Something that we're going to be keeping an eye on, but on the flip side, you have a few factors that are helping boost prices in terms of the US that will be exerting a campaign of maximum pressure of sanctions on Iran to collapse its oil exports and also put pressure on its currency. So definitely something that we're keeping an eye on. So OPEC Plus, new US tariffs, definitely something that we're going to be looking at. And on the flip side, you have that story that is going to be playing out when it comes to Iran as far as oil prices are concerned. But that being said, let's also move on, take a look at Asia Pacific markets, and they're largely falling at this point, with yields on long-term Japanese government bonds hitting levels not seen since the 2008 financial crisis. Now when you take a look at Japan's benchmark Nikkei, that's the one that's down 1.6% thereabout, as you can see on your screens as well. South Korea's Kospi is also the one that is lower at this point, 0.6% lower. Tinge of red coming in for Australia's ASX as well, because you can see on your screens 1.4% downtick thereabout coming in for ASX 200. And Hang Seng as well, downtick of just about 0.9% coming in for Hang Seng. And when you take a look at Shanghai, also keeping it going with that tinge of red is what Shanghai was doing, 0.2% downtick coming in for that one. So, well, largely that's the kind of picture that you have at hand when it comes to the Asian markets. Of course, back home, we did see a show of strength coming in as far as the Nifty was concerned, especially in the last leg of trade. You did have the Nifty maintaining that momentum going on. 22,500 is the kind of level that you had coming in as far as the Nifty was concerned thereabout. But in terms of what we're penciling in at this point, we're penciling in a rather subdued start, a muted start, not much that we see happening at this point. And no points for guessing why that is, because you do have a very weak handover coming in from Wall Street as well as Asia. But with that, let's also take a very quick look at the events that you should be keeping on your radar. Then from the US, you have non-farm payrolls, consumer credit. From the Eurozone, then there's GDP data that you should be keeping an eye on. And from China, of course, there's forex reserves and trade balance. In terms of corporate action, let's take a look at the counters that you should be keeping on your radar there, because AU Small Finance Bank, the board is going to be mulling a fundraise REC will be mulling revision in market borrowing program as well. And other than that, the Sun TV Network Board that will also be mulling dividends. So keep an eye on all of those three counters on account of corporate action. But that being said, let's move on. Let's get you some more important news and updates. The tariff flip-flop continues in the United States. Days after the Trump administration then announced 25% tariffs on both Canada as well as Mexico, the US president in fact has gone ahead and delayed tariffs. The exemptions covering the two largest US trading partners expire on April 2nd, when Trump has in fact threatened to impose a global regime of reciprocal tariffs on all US trading partners. Let's go across to Sumita Karir on the phone line, who's standing by with more details.
Right. So President Donald Trump has put a temporary hold on these new tariffs, according to what the executive order that's been uploaded by the White House. It suggests this temporary hold will be targeting imports from Canada and Mexico. However, like you rightly said, it's only for a short period of time. The pause lasts until April 2, after which he warns that the big one will kick in. Now, this decision is coming in after Donald Trump described fruitful conversations, quote unquote, with Mexican President Claudia Sheinbaum. But his tone, remember, towards Canada has been rather different. In fact, it's been markedly different. He accused the country of unfair trade practices and calling it a high tariff nation. So what's really the tweak or the modification that is coming? Well, a key modification that is part of his new tariff strategy is that products that are eligible under the United States-Mexico-Canada Agreement or USMCA will be excluded from new duties, at least for now. Remember, this is not the first time that Donald Trump has rolled back his decision or has gone back on his decision to impose Trumps. If you remember, there was a 1-month period before he slapped these tariffs on Canada, Mexico, and China. What is USMCA? Well, it was negotiated during Trump's first term. It was essentially designed to create a free trade zone between these three North American nations. The new tariff threats actually show that trade relations remain far from being settled. While he's been rather critical of Trudeau, it's important to note that he's been very supportive of President Claudia Sheinbaum of Mexico. He posted on his social media handle, that is Truth Social, and I quote, "I've agreed that Mexico will not be required to pay tariffs on anything that falls under the USMCA. This is till April the 2nd. Our relationship has been a very good one. We have been working very hard, both in terms of stopping illegal aliens," he says, and stopping fentanyl. So Donald Trump's a justification for imposition of tariffs is largely in what, according to what he says, is that he wants to stop the flow of fentanyl. He wants to stop the flow of illegal, immigrants traveling into the United States, and of course to protect the United States economy. So that's the latest update that's coming in from Donald Trump. But we'll have to see whether he sticks by these.
Absolutely. Lots of moving pieces when it comes to the Trump tariff story. Then thank you so much, Sumita, for getting us that update. Well, Trump is also poised to meet leaders of some of US's largest tech companies, which are facing the prospect of import tariffs, as well as stricter export rules impacting their businesses. In fact, Anurag Joshi is standing by with some more details.
US President Donald Trump is set to meet the heads of some of the biggest tech companies next week. The discussion around the possible meeting with the head of the tech companies such as HP, Qualcomm, Intel and IBM are set to center around the new tariffs that the Trump administration is planning to impose on foreign exporters in the US, and also on stricter export policies of the US. Both the things are expected to hit the tech companies in the US, and the companies are expected to make a pitch with the Trump administration to allow to go about the policy in a more easier way than in a more blunt and a more sudden way. Or the other point that could come up is Trump's opposition to the CHIPS Act of 2022, which provides incentives to both US and foreign manufacturers of chips. Trump has opposed this and asked the Congress to revoke the CHIPS Act.
All right, thanks Anurag for getting us all of those updates bright and early this morning. Tell you what, let's keep it going with this particular story. Let's also delve a little deeper into the kind of commentary that we're seeing come in You do have US Treasury Secretary Scott Bessent, who defended US President's aggressive trade stance. In fact, he says that US's stance on trade is not just about accessing products at lower prices from other countries. Now, earlier, the Commerce Department, in fact, also underscored how far the US has fallen behind its global trading partners. The imbalance swelled to a record of $131.4 billion in January. That's a 34% uptick coming in from the prior month and nearly double from a year ago. So that's the latest commentary coming in as far as Scott Bessent is concerned. But meanwhile, the US president has also gone ahead and also pinned the Wall Street weakness on parties that he calls globalists. Now, reiterating his America First agenda, he's also added that US has been treated unfairly as a country. Trump also added that the delay in tariffs was not because of the weakness in equity markets. The comments come as Wall Street struggles with the major averages headed for a losing week, like we've outlined for you. But, well, that's some key commentary coming in as far as the US president then is concerned. But back home then, let's focus on remarks made by the Finance Minister Nirmala Sitharaman. She attributed to tariffs as a legitimate trade policy tool, further adding that India's current trade stance is fully compliant and consistent with the World Trade Organization framework. Let's go across and listen in.
When you are at a stage of development where your own industry has to grow, you will tend to make sure that as per the WTO norms, whatever is the trade tariff which you can levy. Tariff is a legitimate instrument. You can levy, you will levy. So that is how it has been happening. And it is consistent, as I said, with the WTO framework. Now the question of a bilateral relationship with a country and the tariff discussions between the two countries concerned is what we are referring to now when we are talking about the US and India. So both countries, obviously, they will take care of their interests and we'll keep India's interest on the top and negotiate with them to see how best we can take it forward.
All right, then there you go. That's the commentary coming in from Finance Minister Nirmala Sitharaman as well. But let's shift focus to the euro now, which scaled a 4-month high after the Christine Lagarde-led European Central Bank cut lending rates for the 6th time since June last year. Lagarde, in fact, indicated that the rate cut cycle for the central bank may be nearing an end amid signs of inflation also cooling off at this point. The deposit rate, in fact, was reduced by a quarter point, cut to 2.5%. Monetary policy officials from the ECB, in fact, described their stance as meaningfully less restrictive. On that note, let's go across and listen in to a slice of what Christine Lagarde's address had to say.
Ongoing weakness in investment, in part originating from high trade policy uncertainty, as well as broader policy uncertainty. Rising real incomes and the gradually fading effects of our past rate hikes remain the key drivers underpinning the expected pickup in demand over time. We are determined to ensure that inflation stabilizes sustainably at our 2% medium-term target. Especially in current conditions of rising uncertainty, we will follow a data-dependent and meeting-by-meeting approach to determining the appropriate monetary policy stance. In particular, our interest rate decisions will be based on our assessment of the inflation outlook in light of the incoming economic and financial data, the dynamics of underlying inflation, and the strength of monetary policy transmission. We are not pre-committing to a particular rate path.
All right, then there you go. That's the word coming in from ECB top boss Christine Lagarde about that 6th rate cut as far as the ECB is concerned. But time now to slip into a very short break. More news and updates on the other side, so don't go anywhere. Welcome back. You're watching Market Cafe on ET now, and let's get you, as promised, let's get you the list of stocks that you should be keeping on your radar. Bright and early this morning, Varun is standing by with just that list.
Keep an eye on Bajaj Finserv because the company has given its February month data. The gross direct premium underwritten for the general insurance business is 1,219 crores, and for the life insurance business, the total premium is 1,080 crores. Keep an eye on BL because the company has received orders worth rupees 577 crores, and with this, the total order book for the year FY25 stands at around 13,724 crores. That is the total order that the company has got in the year 2025, FY25. Kalpataru projects, the company along with its international subsidiaries have actually received new orders worth rupees 2,306 crores. Biocon Biologics and Civica, they have collaborated to expand insulin aspart access in the United States. So keep an eye on Biocon as well. Shriram Finance, Moody's has actually assigned a first time BA1 long-term corporate family rating to Shriram Finance, and the outlook is stable. Moody's says that the company has highly profitable franchisee, and also the overall capital position of the company is good and the track record is good, and that's the reason this rating has been assigned. Brigade Enterprises, the company has launched a project in Chennai, that is Altius, and it's a premium residential project, and the total revenue potential for this project is around 1700 crores. Quest Corp, the company has received NCLT approval for the three-way demerger. Also Power Grid, they have won the bid for Kernel 3 transmission project, and this is by the way of competitive bidding process that the company has gone under. Jindal Stainless, the company has sold its entire 26% stake in Jindal Coke through a buyback, and the company has received around 195 crores. And last but not least, keep an eye on Muthoot and Manappuram, because sources say that RBI has asked gold lenders to actually tighten the overall gold loan processes. So keep an eye on Muthoot and Manappuram as well.
All right, thanks Varun for that update coming in. With that, completely out of time on this edition of Market Cafe on ET Now. Thank you so much for tuning in.
If you like this video, then like, share and subscribe to ET Now.